All right, welcome. Welcome to the Hawkeye Room. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you can sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange. Trade and seek advice from an independent financial advisor if you have any doubts. This is Tuesday, September 8th. We're going to be gone from about 8 to about 10:15. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trades taken during the live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies rules for entries, exits, targets, and risk management. Having said that, let me just sort of clarify one thing. When we say do not risk, do not invest money that you, or do not trade money that you cannot afford to lose. If you, once you get the system down and once you understand how and become profitable as you trade with a demo account or as you trade with a live account, please don't use risk. When they say don't risk money you can't afford to lose, it means just that, because there's a good chance that when you start trading, and even when you go from demo to live, there's a good chance you're going to lose a good portion of that. But the key is that even a small amount that you can afford to lose, once you turn that around and once you start getting consistent, that small amount that you can afford to lose will turn into that large amount that we all want to see happen. So just because, so don't go and do the demo. Don't start thinking, okay, now I've got this now, because it is different. It's a different mindset. It's a different focus. And those small, and just grow that account slowly and consistently, and eventually that small account that you could afford to lose will become an account that will serve you well over time. That's just my thought for the day. And having said that, let's go to the charts. Let me get my
Absolutely. Oh, hey, before we get to the charts, there's a really special announcement. Where it's like pretty much your birthday today.
It is pretty much my birthday today. Yes, it is.
Yeah, yeah, and it's really important. I consider you one of my heroes, and just wanted to say happy birthday. Really love and appreciate you, man.
Well,
You have to
thank you, Matt.
sing that. Ruben and
Ruben
I
and
already sang to him. You have to
yeah,
sing it.
Ruben is already saying happy birthday to me already this morning. So
Oh, he did. All
yeah,
right,
he
there you
did.
go.
Yeah, he was the first one in the room, and Eva was right there, and they wished me my happy birthday wishes, and I thank everybody for the thoughts. It's always nice to have a nice group of people to spend the day with here.
Absolutely. All right. So let's check this out. I like it for a sell. I Anyway, like we missed the original trade, but there might be a secondary trade, like you said.
See, that's always one. Yeah, okay, keep an eye on that. I'm going to go through the setup that I have here, and as
Yep.
we're
Go
doing
ahead.
that, Matt, keep an eye on that. Because if it does start developing to another cell, we can stop this replay and go to the live chart. So
Yeah,
anyway,
it actually might right now.
shall I go to it right now?
Yeah, I think so.
Okay, all right.
It's
Let
not
me switch.
like
Let me switch gears here. Let me just exit out of this, and we will.
yeah, we might go a little fast today just because of this, but
Oh yeah, let's see that. This came up.
you see
Retested the wedge.
you see what I'm talking about?
Yeah, that
So
looks
you're
like
in the
it's.
wedge, you pulled out, you came back and retested it, and wait a little bit, I think,
We had a
because I
second.
have a secondary wedge underneath.
Yeah, this area right in here.
Yeah, there's
Okay.
two connection points, so
Yep. I'm on a 5 minute chart right now, but we're looking at sort of like there's a little bit of a trend line coming down here,
yeah,
and
but
so I'm
don't
gonna
take the
start.
trade yet though.
Yeah, I'm gonna see if I can draw this out here. Is it something like that about what we're looking at here? And it
Uh,
came right up into the zone where this was the original zone. What we had here was the original wedge over here.
yeah,
Let me change colors on this because my original wedge is usually going to be orange. My secondary wedge I'm going to make yellow. So there's a yellow one. That's the secondary wedge. came back up. It broke through the main wedge. This was right at the alert. Came back in and it closed. This is the area that I'd like to see. I'd like to take when we have the 3-point hit on my trend line and it breaks the first one, I want to see it close below the second one. So that's why I drew this little area right in here. So basically it's like, I want to see it close below that blue candle, which is the midpoint. Here's the anchor, here's the hit, here's where the alert was, tucked it in as close as I could. We got the break. The first break, you can see there was this blue candle. Now, if I go to a 1-minute chart, you can see that that candle actually closed on a 1-minute chart, but it didn't close into my zone here. It came in close. It broke the wedge. It closed below the wedge twice, but it never really did get into this area right here. And you can see it came right back up into the wedge again. Now, it still would not have been a bad retracement. It still wouldn't have been a bad target, but it still wouldn't have qualified for me because what I'm doing is I want to see that secondary close. I want to see that close below where that midpoint was, and this was the close right there. I want to see it break this blue candles where the body of that blue candles. I want to see it break and close below that, and it never really did that. But when it did close, it came right in, pretty much cleared the whole area up. Came a nice little retrace. There's still, if you have gotten in right here and used a 7-pip stop, you probably would have gotten stopped out. Same way with here. If you got in on this one, on this candle here, the retrace probably would have stopped you out with a 7-pip stop. I have started widening my stops a bit. So right now, here's our secondary wedge. Let's see if it's going to, what it's going to do. I don't have let me see, can I get a anchor here? That's starting to go in the wrong direction.
Yeah, I'm taking this one on demo, but yeah, I'll take him to sell right now.
Okay, all right, because of the break right here.
Yeah,
Yep.
and it's done.
Okay.
So.
And so I'm going to hold off on this just because I'm still trying to re-engage from not being here yesterday.
Yeah, no, you're fine. And this is a demo trade, by the way. This is not live, so.
But this is a good. I mean, you had a nice pullback. You had a nice move down. Came back, retested the wedge, broke through a little bit. So there's some sellers up in here. Came back down, retested again. Now the question is going to be: is it going to be able to break? Now, where did that line come from? I had that line drawn there first. That may have been just a. Oh, that's probably where the A is. Nope, it's not. I think I just had a line I just moved away, I just never turned it off. I'm just going to, since I don't know what that is, we'll see what that is going to be. Let's go to a 15-minute chart and see where our target may be on this.
Yeah, let's see if we can nail that target.
Yeah, let's see if we can do that. So if we go over to our 15-minute chart, we have, here's the area we're looking. So here's the low of this move. So I'm just going to mark that and see if I can find something beneath it or around it that will help support this for the target.
It's pretty cool when you could get 2 trades off of one wedge, right? A lot of people are only getting 1 trade off of 1 wedge.
Yeah, it came down, broke through this, couldn't hold it. Now we're going to see if there's anything else over here, further over here.
I think it's going to dig deeper.
It's got a little ways over. Yeah, over here we got some wicks over here. So I would say if we were going to look at a target, we have some wick areas over. Let me spread this out a little bit. I would say right in here would be the next. You got a couple targets here. Here's the body of this blue candle here. This is the origin of the big move. This is where it's all started. Came up, retested this zone. So right here, this is a zone that we have to be looking at, where the body of the blue candle, body of this next blue candle where it came in, these wicks right here are where there's some sellers, and it could go down even a little bit further. So this is so here's where the whole thing started, right down in this area right here. And let's see if this thing's going to come over and see what it's going to do. If it breaks through this orange one, which it looks like it's going to This is on a 15-minute. Let's go to our 5.
I was able to take that first trade on the original wedge. Man.
Over here off of the 545. That's because you're over there in Europe, and you get to
Yeah.
be awake. You're awake by that time
It
already.
was like 10, 11 a.m. So yeah, supposed
Yeah,
to
that's
be.
a nice
I
time.
was I was officially awake, but I was taking care of the wee man. So
I've posted some screenshots of it in the chat.
nice.
Oh, good. Okay. Maybe what we'll do is we have some time here, Ruben. Maybe we'll let you share your screen, and you can go through your thought process and your analysis,
Of course.
and see if how I like to get to the point where we're getting people in the room to start sharing their screens, and you're going to be a prime candidate to start that process off here. So yeah, this looks like this had a nice little break, and nice little pullback. Came back, retest the wedge. You have this nice little trend here. Here's the anchor. Here's a hit. Here's a little bit of a little more of a hit. Probably like this one a little bit better. You have a high anchor. So that validates this trend line.
Yeah, exactly.
We don't have the third hit on the bottom one. Although we
but
had
we
the
could
break.
get it when it comes back up.
We could exactly. Yeah, we could.
Oh, mine's a little steeper, Al.
Steeper.
Yeah, I got it to the lower. I
You
got
have it over here.
no. Back it up.
This way.
But yeah, more.
Here.
Yeah.
So here's your anchor. Here's your hit.
Yeah, and then I have it
And
bounce, and then I had it break, and that's why I took the trade. Is because the support.
Yeah, this bounce here.
Yeah, exactly. So it rejected off the top, and then at the bottom, you see how price came down and tagged it right to the pip as close as you can get, and then it broke, and then it tagged it again, and then it took. So for me, that's on a 1 minute chart. That's as tight as you can get.
So this candle right here is what this was your reference zone right here.
Absolutely.
That one right there.
And that's why I interrupted you and I said, hey, I'm taking this one on demo.
Good. Well, good. I'm glad you did. And let's see if you got in here. Let's see if you probably already you may pretty much already have your 7 pips here. Yep, you should have your 7 pips.
Yeah.
If you're well, of course you had your probably 1.5 or 1 pip fill. So you've been filled somewhere in that circle, and then
now it's just bouncing back a little bit.
Now it's retesting. Now it's retesting this area where we had this one line right here.
Looks like it's making another little wedge. So we had a wedge and a wedge breakout, and then we have another wedge coming up. So
that's a good call.
We're just trying to get more out of the wedges, right? There's lots of opportunities, and I've found that if we can get to a place where we're just using the wedges to come to the charts instead of putting so much focus on the wedge itself. You know what I mean?
Yeah, I do, and I agree with that, because that's one nice thing about the alerts, because there's a lot of these patterns on other pairs other than what we're getting from the iris. What's nice about the iris is that you could be looking at another chart and it says, hey, take a look at this or something going on over here. And that's basically, and then you're saying, okay, what am I seeing? But your eyes are trained to be able to see these even on other pairs, or on the, even like I've been actually doing some work on the S&P, doing that, still work with the S&P futures, using the same technique, same philosophy. And, but there are just a series of, you have a big move, and then all of a sudden, then when it starts trending, you actually have all these little pullbacks, and it call like a drop. There's the basing area, and then oftentimes another drop. And if there's enough strength, like from this move right here, you're getting the basing. It has a nice strong drop. It's basing. Well, basing the same thing as a wedge. And these little mini moves come here. And you can look at, then if you can take this fib tool right here, take this high, take this low, you've got your little basing or your wedge here. If it can stay within this 30% range, let's say it can stay within where this, again, where this circle is, pretty much this area right in here. If it could pull back and then break, here's your target's going to be down here someplace, right about in this area. So this could be a nice little, this could be the trade of the day here. This would be the next area that you'd be looking for it to come to for a demand area. And I'll be looking at this being a supply area. If it can hold this, area up here.
I feel like it will. It's going to come up a little bit more, but you know how we've seen so often where it breaks the wedge and then comes back up and retests the bottom of the wedge?
Uh-huh.
Probably what it's going to do right here.
See, now it broke this. Now still, okay, so what I'm saying, I'm going to see it stay within that 38% retracement, and that's going to be where this yellow, where the yellow line is your zero mark. And as I raise this up and down, you can see where this area right here, when it aligns to the bottom of the move, that tells you what your percent of the retracement was. So right now we're looking at this is a pretty strong retracement right now. Back into the wedge.
Yep.
And right now we're looking at we're right at a 50% retracement.
And I'm looking for a bounce off of the 62, the 1 minute 62, which is that white line there.
Which is the white line right here. Yep.
So often it'll bounce that and then turn around, but we'll see. We'll see. It could slice right through there. That could have been the end of that move, but
Yeah.
we'll see.
And
The hull on the 1 minute flipped.
Yep. And oftentimes you'll see that where you get the move, you get the early morning break, it comes down, and then it starts trending to the upside. You already had your 5 or 7 pip move here. Actually, this was a pretty strong move when it came down to over here where the original alert came in. This was a 20 pip move, if I'm not mistaken, over 20 pips, 20 some pips to the downside here. So that was a huge move. So that it's hard to say whether this thing is going to now reverse and break the top of, remember the orange line is the orange triangle or wedge is where the alert came in. This is the secondary. So you came up, now it's retesting this area. It's a 50% retracement, so I'm going to go and move this thing on this zone up to this area right here. I'll take this off.
Let's see
Clear
what
this out of
happens
here.
here.
Clear this out of here. Remember, this is the area where it broke the second time. Came back up, retesting this area. Now we still have a high, a low. You have a lower high, a higher low, had the break. So now you have a lower high and a lower low. It hasn't broken this yet though. So right now it's basing inside of this BA range. So let me just pull this down here. Let me pull this one up to here. And this is the new playground that's playing. It's playing into this area. It is now making a series of lower lows and lower highs, but it still hasn't broken this, and it still hasn't broken this one. So what I'd be looking at right now is I'd be looking at a supply zone up here. I'd be looking at a demand zone down here, and be looking and setting these at a lower and upper 25% area. Take this tool over here, bring it up to the top, bring it down to the bottom, and now here this top 25%. But that's where I'm looking at the new sellers are being, and I'm going to use that off of this candle right here. I would have to see a close above the D before I would want to take it long. But if it does, now we're looking at breaking the top of the wedge. Until then, we're looking at top 25% here, bottom 25% of the move here, and stay out of this area. Don't be trying to trade this. Wait till it gets. If you're going to take it short up here, take it long down here. But if this breaks, and it can break the top of this wedge, then you have another shot then you have a look at maybe it's going to go higher and longer. So let me just see, I'm seeing an anchor here. If I extend this out, anchor, here's a hit, near hit, here's a hit. This is the new, I'm going to take this one off.
Yeah, I took mine off, my original one.
So now let's make this yellow one the one that we're focusing on, because if we get a close above the D, here's my new, I want to see a close in between. Here's my anchor. So here's my, I'm going to say, no, this is still higher. Oh, come on. Here we go. Oh, let's see.
No, it's not. So Mike, it's 8811. That the RSI, the blue dash is at the top. 88 and 11.
Oh yeah, that's here on the RSI.
Yeah, and Razan, you had a question. You said, try to put all the questions in the question panel. That way we don't lose your question. It shows up differently for us, so it's good. But interesting question. You said GU and EU normally move in the same direction, and which ones do you prefer? I'll be honest with you. Whatever one gives me pips, whatever one gives me an alert that I can look at and I can figure out if I want to take that or not. I'm not biased towards any pair in particular. I'm more or less looking for time of day. Is it a good time to trade that currency pair at this time? Is it something that I want to get into? Is it a high risk trade or is it a high probability trade? And then I'll do my analysis. But yeah, I'm not married to a specific pair. I won't sit there and say, okay, well, I'm only taking Euro USD and USD JPY today, because that's gonna maybe cloud my judgment a little bit, and I'll miss out on some other opportunities. To me, I don't put a lot of weight into how a particular, worrying too much about a particular pair and how it moves so much. I'm looking for a very specific thing that repeats itself in every market, every financial market, and every currency pair. So not so much. Do you know what I mean? Does that make sense? Long explanation to say I really don't care what currency pair it is. With Eris, I'm just not trading gold because it's not a currency pair, still a indices, is it? Is that what they call it?
See, that's
What do they call it?
It's a commodity, actually.
Commodity. Okay, yeah. I don't know. I don't trade gold, so.
There is a software coming out that does trade gold and has been doing it rather successfully, and that's one of those things, one of those four that I believe you're going to be seeing coming out in about another 2 weeks. I'm thinking by the end of September we should have them up and running for everybody.
Yeah, it's. I'll just tell you, I'm on one of the testers for Gearbox specifically. I can't talk about profits or anything that we've been able to do, but all I have to say is make sure you're plugged in, because it's I haven't seen anything like that before, and it's anyway. Let's just put it that way.
Al,
Yes.
do we have an update yet on the indicators? I've got a question here. Where can Harrison get the RCS?
Yeah, email me at Hawkeye. Just send an email with your request and your email address to hawkeye@avoriaprime.com. And I'm trying to get a hold of Anthony. Actually, Anthony and John, those are the two developers of these indicators. Right now, we're at the point where we're trying to get them to set up the via your email addresses to allow you into that 30-day free trial that we haven't started the clock on that yet because we're still trying to get them together because they have to do some things that they have to do and from their end to be able to protect their products. So as soon as, I talked to John the other day, and he and Anthony are working to get together. The holiday, I don't know that they got together over the weekend or not, but I'm going to follow up on that today and see if we can get a hold of them and see where they're at with it. But we're trying to give everybody until Avoria Prime can get set up in with your subscriptions, which is basically what we're looking at doing is if you sign up with Irish, you get the indicators as part of the subscription fee. And so everybody who has Irish should be able to get these things through the subscription. That's where we're going with this. We'll see how it's taken much longer than I anticipated. It's just one of those natures of the beast of trying to get a hold of people that are in different countries at different times and different work schedules. But we're working on it.
Matt, did you say that the new ones are coming out at the end of September?
That was the target date that I got from Sal, as within that they're working with the developers of these softwares again, there's some coding involved with getting everything all set up with however they have to do
manual
it.
approval process, and there's incorporating the API into it. I'm going to take another demo sell on Euro USD, and I can tell you why. So right where it is, it's bouncing off the top of a trend line for me.
You're looking at this trend line that we have here?
Yeah. Yeah, but I have mine up a little bit higher at a different angle. I put a pitchfork a couple candles back.
Let's see here. I'm gonna move this over here. This is basically the supply zone.
So I like this, but that's another
Nice
demo,
little
guys.
Pullback, nice little pullback here. And it came up to the zone, and it has a rejection right here. Anchor, here's a hit, here's a hit. We had to actually, it's what it's doing is it's respecting this trend, this newer trend line here. Thing I don't like about this one, Matt, is we got the crossover of our 1 minute moving averages off that rejection.
Yeah, I saw that.
So right now we have some consolidation. We have some consolidation here.
Yeah, it's still a third hit off that pitchfork. So to me, it's demo. So we're just messing around. I'll tell you when I'm exiting on the demo trade.
You got in on this red candle just before the break on the blue candle?
Yeah, on the blue candle. As soon as it started pulling away, I have a line that goes, that's kind of, so if you connected the four tops that you have, like if you draw a trend line, not that far back, but right from let's see, 630, no, not 630, 645, yeah, there, you can draw a trend line. Or where is it? I'm just trying to check where it is. Yeah, you can draw a trend line from 651 all the way down, and it'll touch at,
you're talking about down here?
27 to the top. Go up a little bit, bring it to the top of that other candle.
This one there?
Yeah, right there. Check that out.
So the anchor, here's a hit, near hit with some rejection.
So we'll see.
Yeah.
But
I'm not as excited about this one to go
no,
short.
I'm not excited more about that one either, just to be honest. But we'll see what happens. That is See if it'll bounce there.
Because once it breaks through this area here, then we have to see if it can close in here. If it does, then we could be going up higher. And we'd be looking at some targets where we had the original wedge drawn. From here's where the alert was, came in.
All right, look at that. That stopped me out pretty quick. The cost, it's going to be the same cost as the software now. They're going to, with the new pricing structure, I think it's like $99 for one software, and for two is like, I don't know if it's 197 or something like that. I don't have them all off the top of my head, but
Yeah, basically, you're gonna, for just the one, like the Alexander or the Einstein, it's going to be rather than being 189 for the one, it's going to be 99 for one, and you'll be able to switch these different softwares on a week-to-week basis. You could say, okay, I want to run Alexander this week, and then next week I want to run Iris or the other one. I think it's like you can get two for like, I think Iris is going to be just a standalone Iris would be like $59. I think is what it is.
Yeah.
But so you could have Iris and Alexander combined. You'd have it, and you could get it for $159 as opposed to $230. I think is what it is right now for the two.
Yeah. Yeah.
So they're going to be collectively, it's going to be cheaper. You can be able to have two or three different software to choose from, and for less than what you have for just the one right now.
Yeah, and
so
it's really cool.
It'll be a good deal.
It's really cool because you can switch between them. So you could use. I think there's one. I think the names are Neo the Legend, and then there's Nostradamus or something along those lines, and then there's one that only trades the Singapore dollar. And
that's Nostradamus, if I'm not mistaken.
Yeah, it is. It's very specific. It's a fine tune. There's no other currencies that it trades. It's basically designed, like the DNA of it is hardwired to that currency pair.
I'm kind of looking forward to trying that one out.
It's I don't remember all the
The
details
other name is Variable. Gearbox.
Oh yeah, Variable. Okay, yeah.
Nostradamus.
Yeah, and then Gearbox. And I'm a little bit more biased towards Gearbox because I'm testing that one. So, but all I have to say is wow.
And which is the one that trades gold? Do you know? Is that any of the original?
That's the one it's called Bags.
Oh, okay, yeah, it's one of the newer ones.
That's the one. That's the one I'm beta testing right now. It trades gold and trades the S&P, the US 500, which is the S&P index. I'd be real careful with taking this thing along right now. I want to see it right now. I want to see. Let me go on the 5-minute chart here, so it's maybe a little bit easier to see here.
Yeah, I don't like it long. Just
and just take this. Let's just take this off. But here's where we had the original drawing on this. If I can, let's go back to drawing the original wedge that we had. And we had let's see, we had I believe I took it all the way up to here for the original move. This goes all the way back to yesterday's high. And a low, lower high, higher low right here. We had the break. Let's make this one orange for the higher time frame. Let's take all this stuff off, right? I'm going to take this off right here so we don't have that so cluttered. So here's where the original zone of I want to see it close above. into this area. I'm looking at this blue candle right here for, I want to see break the wedge and close above that blue candle. That was the high. So I get it close inside this blue zone here.
Yeah, I think the key level that you want to see hit or rejected is going to be 1808.
Let's see, and we have, right now the moving averages on this are still not in the right direction to
Oh,
go
1818.
long. Because it's going to, we're looking at, this thing's going to probably challenge this 62 right here. And you can see where it's already kind of done that. Because it came up, hit the 62, got rejected. That's one of the problems about going long on this one. Now, if you have, now the other thing we could have done was drawn the wedge with this area. So you have an anchor, near hit, here's a hit, broke through the bottom. Now it's looking to try and break through the top of the wedge. And if it does, I want to see a close above this blue candle right here, which is actually the highest blue candle here inside this wedge. And then I want to see it break the wedge. Let's see, we got a, probably, well, right now we don't have a break yet. So, I mean, this thing's still looking like it wants to go sideways right now. Strong move down, retest, anchor, mid hit. Here's both these, the lines on this are all still valid. Let's see, there we go. I'm gonna keep that. Take this one out of the way. This one's already been broken, so we can take this one out of the way because we don't know where it's gonna go from at that point. This is still our playground zone. This is still retesting the bottom of this wedge here. But this move could be temporarily done for right now. It's just right now it's basing inside this area right in here. I'd like to see a little bit more conviction of the turnaround on this. This would be the candle. This this all you see this for 1 hour it had nothing but red candles all the way down. So this area right here is where I'm looking at. It would have to close above this red candle in the zone, breaking the wedge to be where I'd want to be taking it long. So for the most part, I'd say this move is the way we normally trade these wedges. We're only going for 7 or 15 pips. This move's already done. Now the question now is if it goes sideways. Now it's just a question if you want to be trading a sideways range, but it's not really making right now. It's just trading a range sideways. It's not really developing new wedges, at least not on the 15-minute chart. We don't have any more alerts, do we? Let me see here.
No, I don't think we've had any alerts since we.
No, last one is still 5:45. It's still the last alert we've had here.
Yeah, yesterday it seems like they were coming in quicker than you can look at them. And now
Yes,
Yeah.
my phone was dinging all day long, and I thought, well, gosh, maybe I should be trading today, but
It's
I told
only
myself-
because there wasn't a lot of volume, right? So you're gonna have a lot of consolidation.
yeah, I'm not sure. I think Ruben said he got several good trades yesterday because of all it was
Nice.
very active. Yeah.
Yeah, I did. Well, several. I don't really remember. I'd have to look it up, but I did take one on UChef, which was great. It gave me more than my daily bread, so yeah.
I guess just because America had a holiday doesn't mean the rest of the world did, and there's probably still enough trading during the London market to be able to get some of those good trades.
Oh, of course. Yeah, U.S. and Canada had a holiday yesterday, so. even though Canada's a much smaller player in the global markets.
Right now, as you see where this thing had all the moving averages came up, crossed over, came up into our supply zone. Now I'd be more looking at to maybe take this thing short as we get the confirmation.
I was
Off
gonna
of-
say the same thing because in 1 minute it's like making another small wedge and it's I
Exactly.
don't know, kind of flat bottomed.
But we had
I'd
a high
like
here.
to see it go to the downside as well.
Yeah, and we had a high here, way over here. We had a lower high, not very much lower. It went right up into it couldn't close above this blue candle's body.
Yeah.
I'm just going to take it right over here. It couldn't close above this. Had a wick up. Now it's going to retest this again, and it's also going to retesting the top of the wedge. One thing about with these, a lot of times if you see the consolidation where it's facing or going sideways or forming another wedge, right below a trend line, oftentimes that's the armies gathering their forces to break through the line. Think of it that way. But this is a nice little move up. It came right up into this. And I would say if we can get a close above, let's see. See, we still have this. This is still the main wedge right here where the original order came through. So if it can break through the top of that, it may have something. Let me redraw that. Let me get to a higher time frame here so we can see a little bit better. But if we're looking at where you can move the C over here, tuck that in. I kind of like this area in here. And make this, let me just redraw this.
Also,
whoops, well, I'm gonna get to the 50-minute. Oh, go ahead, Ruben.
if I'm not mistaken, on 1 minute there was some kind of divergence actually between the candles and the RSI.
You may, let's see here. Oh, in the 1 minute, low. It's
No, after that, from
after this one.
Yeah, from there, that's where it started. You have that 4 or 5 or 6 blue candles, so that high.
Oh,
Then
right
it went
here.
higher, and the
side went higher.
RSI keeps getting lower.
Yeah.
Then the last candle is making, yeah.
Yeah, be careful. Yeah,
That's where it
you're absolutely right. On the upper part, there is divergence. Be very careful with divergence on the 1 minute because a lot of times you'll get several of those before it actually turns. But this thing's looking. The thing I don't like is it still has to get through this 62 on the 15. Times 8:45. We still have another 45 minutes before the U.S. market opens. But I'm going to note where this is right here. And that's at 1807. So I'm going to push this up to 1807. Right about there. This is our 15-minute 62. Spread these out a little bit. Now it did close above the 5-minute 62. You can see that. Right, and that's at 1801. So you have this little range right in here. It's got to get through. It came up, closed below. Let's see how these are looking. We had a green zone here, couldn't break through the green. This is where This is where the whole move started over here. We broke through this green fib line, retested. Breaking through, broke through the green line, retested. Have a little bit of, on the 5 minute, we have a little bit of a wedge up here, right in this area. This is your area here, Eva.
Yeah, it is.
What say you on this one?
Well, for now, it's see, I don't draw all these wedges within a wedge, so
So you have no comment on this one.
I have no comment on this, to be honest with you.
I didn't mean to put you on the spot.
Actually, I'm back testing.
Okay.
I can give you my results. I haven't done a lot of them, but I can say that just to let everybody know, I've been back testing wedges entry on 5 minute charts instead of 15 or 1. And so far, I'm out of the few that I've back tested, I would have to say I'm about 60%, 65% profitable on the 5 minute.
That goes right in line with what my profitability factors are.
Yeah, so that's not so bad. One of them actually, and of course it was the US CAD, that at first it came down, it popped down, stopped me out, turned around and went and blew through my target. So that just tells me that with US CAD, I may have to adjust my stop. But anyways, yeah, so it's going pretty good. And the only one that I can see so far that I'm really, really not liking for my strategy anyway is the New Zealand US. So it's I'm kind of leaning to not going there with it, unless it looks like a sure thing. But yeah, so just a little interest point.
Good. That's always good to hear those. So what you find as people do their back testing, find out what the results are. It all helps everybody out a little bit. Everybody has a little different mindset as far as what time frame you want to trade and what your comfort levels are. And there's nothing wrong with any one of those choices. Is what's important as you do what's comfortable for you. And that's all I have to say about that.
Yeah, as long as you're more profitable than you are losing trades, then that's the name of the game, no matter how you do it or what time frame you're using. It's just whatever helps with your mindset. Right now, I think the 5 minute is helping with mine a lot more than the 1 minute ever could at this point in time in my trading life. But I'm liking it. It seems to be valid. My thought process is valid for the way that I trade. So it's working.
One thing that's getting really interesting with this, as we're looking at this right now, we had a nice strong move coming down, came back up. We had a little wedge right here, which is where we got the secondary, where Matt called it out earlier when we just got started this morning, I believe. It was around 8 o'clock, I think. No, actually, this was the other, see, this is 5 minute. Here was the original break. Came back, retested it. This was actually at 7:30 where it broke again. So right now it's kind of, when you really look at it, it's really kind of just still going sideways inside this range right in here, from the C to the, and there's a lot of buyer. This is where the original moves came from, as we drew earlier when we went all the way back on the 15-minute chart. This was the range where that big strong move to the upside started. And you see it came down, and now it's looking like it's going to maybe give us another little run to where the upside was. This is why you can't ignore these higher time frames. And as we see over here, where this is on the 15-minute, but you can see where this is pretty much where on the Euro US, you see I've got two. These are like zones way back in, I think it was like January, February of 2018, where they're looking 2 years back. These were the zones that were created 2 years ago. and it came all the way back up to this zone right here, back in September, early part of September, but this is like a level and a level, and so right now it's really ranging between inside these two red zones. That's on the higher time frame. I had to go all the way back to a weekly chart in order to find those. So right now it's still playing around in this area, but it could break out of this as the dollar starts getting stronger. And we said, look and see, check our charts here. Right now, you see that the dollar and the euro are right in the middle. I said we have a currency pair ranging from 0 to 7, and it's right. They're both right in the middle of those two pairs. So it's I say right now where we had the wedge alert. Again, I don't know what the algorithms are that generates these alerts, but you can see where it worked out very nicely to the downside. Now the question is it going to keep on trending to the downside, or is it going to break through and retest this whole red zone? And right now, if you look at it, we're really right in the middle of it. If you draw this fib retracement line from the top of the red to the bottom of the red, you can see we're really right now right at the 61.8 to 50% retracement of this whole area. This is the area you want to kind of stay out of because it could go up or down just as easily either way. Any other questions? Any questions? This is a good time for questions. We don't have any new alerts to show. Anybody have any questions about how we drew the original wedge, how we're drawing these trend lines and these wedges, basically which are just trend lines? And I don't, back to the 1 minute versus the 5 minute, we bring it into the 1 minute just to tuck it in and get as tight of a trend line as we can. But whether you want to take the trades on the 5 minute or 1 minute, that's really, I'd say the jury's out as far as which one's more effective. I think Eve and I were going over this the other day, and it really, a lot of times, it wasn't really a whole lot different other than the fact that the 1 minute may have closed out sooner. But I think there is something to the effect that if you have a 1 minute, you figure there's 5 1 minute candles in every 5 minute candle. And if you can see where the 1 minute is maybe two or 3 minutes into the move and it closes, you may expect that to maybe trace a little bit before that 5 minute candle to close. I don't know the answer to all that, but I think there's value in either way.
Yeah, I I still enter and exit on 1 minute, but I do use split screen with 15, 5, and 1 next to each other, and it's more like a combination of those three.
Yeah.
Especially the combination of the 1 and the 5. I mean, I use the 5 a little bit like you do for marking up my target zones and everything. But I also take an account when the candle closes, the 5 minute candle, above or under what it closes. But how do I say this? Most of the time, I look at the 1 minute for my entry and exits.
Yeah, I think in this case, where we're looking at right now. Thanks, Ruben. As we're looking at this, I'm looking at where my A and my C is, and I'm inclined to think if this thing breaks and closes somewhere in this area right here, below this blue candle right here, we had a nice big move up. If it can close inside this, what I call my entry to close zone. If it can break, right now we have an anchor, a hit. So here's our third hit. And if it can close inside below this blue candle. If it can close inside there, we may be looking to go lower. And right now, we just had a 5-minute candle close, which was right on the close of this previous blue candle right there. And it closed inside where the wedge was, or is. And if you can look at all 3 different time frames, and a lot of times, what I like to do too is clean up, once I get the wedges drawn, clean it up all in the 15 minutes so I can see what the price action is on the 15. And you can see where we don't have a close above this candle. That's the highest candle close, which is about where our 62 is on our 5-minute. There's 3 pip difference there. So we haven't had the close above that, and we haven't had the close below this area right in here, which is basically what we designate as our demand area from that range that we had earlier. Again, it's just trading inside this, and it's not trading with a whole lot of volatility.
Actually, Al, I've got a question for you.
Okay.
In the Q&A, Al, if the target is just for 7 pips, then entering on the 1-minute chart is only to race for entry, or is this a process for capturing more than 7 pips? As the move breaks beyond the direction you want when the 5-minute candle starts?
How do I want to answer that? Let me see if I can totally understand
Yeah,
that.
I'm gonna pull that up again.
Yeah, let me read that one.
Yeah.
Basically, I said we go for 7 pips. As I have been increasing my stop a little bit to the 10 pip mark, I'm trying to find, basically when I put my stop, I want to try to find an area on the chart that makes me feel like it's going to give me some sort of bounce off of. So I usually, even though I may have a 7 pip or 10 pip stop, I don't usually let it go that far, because the price action on will usually tell me ahead of time not to do that. This thing's starting to, we still have some consolidation here, but if you go for the 7 pips, and usually I'd say 5 to 7, because a lot of times your spread won't get you the full 7. But if you can just get a 5 pip target out of it and take the profit, that's the winning trade right there. The sooner you can get in, the closer you can get to where the breakout is, the more likely you are to get that target price. I'm not sure if that answers your question. And oftentimes you'll see the 5-minute and the 1-minute. Well, oftentimes the 1-minute that's really successful will close on the 1-minute chart, or the 5-minute chart. You'll get the 1-minute close will be on that close of that 5-minute candle.
Well, personally, I'm starting to be able to take very precise exits on the 1 minute. Yeah, since last week, almost every exit that I take on the 1 minute, I exit and the price goes the other way around. Not sure if you understand what I mean by that.
Yeah, and it hits your target zone, and you just take your profit, and you find out that was the zone where it's going to bounce.
Yeah, that's what
Yeah, and that's what you do. You look to see where, once it breaks this area, where's the next likely bounce? Now, if I look at this, if it breaks this B area right in here, you can see it came right up there and tested it. Now I'm on the 1 minute here, but if you come over here and look at all these wicks, and this is where I'll take it, where I have a wick here. So I come over, and so here's the top of the wick. So if I could bring this over, all the way over here, and see where is there another wick? Well, this blue wick right here was the last wick before, when I come all the way here, I hit a wall. That's the candle without, here's the wick here, but it was above that. Here's the wall. Here is the end. This is the target area, and you see there are very few wicks in this whole area. So once it breaks this, this would be a reasonable target area all the way up to in here.
We just got 2 new alerts, GBP and NZD.
Oh, yay, we got something new to work with here.
Yeah, there's okay. Just a quick observation on the Euro USD. So if you'll look, you'll see that the last 2 1-minute candles are like they're 5 pips each. They're really big. It really moved pretty aggressive. What happened was it came up and it was like 1 pip away from testing the top of the wedge. So it bounced there and it went down 9 pips right away. And then at that same time, the whole moving averages, they all flipped red, but it just flipped really quickly. So anyway, let's go check some other pairs, see what's going on, because there's nothing really we can do at this point for this.
Let's refresh this one. Start, refresh. US 9 o'clock, USD Swiss. Okay, let's check this one out.
And then we got NZD, right?
Until you look at NZD, I'll look at the US Swiss. How's that?
Yeah, let's do that.
NZD is looking nice, if you ask me.
Yeah, it is. It's got a strong downward trend.
The NZD?
Yeah, it's.
Yeah, let me get the Swiss one up here.
Let me see
And
this.
Get the US, duplicate this, and get the NZD. We'll take a look at both of them.
But
Oops.
I probably misread because there was no alert on NZD. Excuse me for that. It
Oh.
was GBP and
We'll forgive you, Ruben.
Oh, GB.
Oof.
Okay.
Oh, it's GBP NZD? No, GBP USD.
Both are
Yep,
good pairs.
USD.
Both are
USD.
good pair. Okay, I'm going to look at the US Swiss. I kind of like that pair. So I'm going to take this. I'm going to take my moving averages are showing that we've got a. They're not exactly in the right direction here on the Swiss. Let's see what they look like on the British. Here, the moving averages are in the correct direction on the British pound.
Yeah, and the British looks nice.
This is
coming up
going
the-
short. This one's going. We're getting a crossover here, so we may be looking at. It's a descending wedge on the British pound.
It would have
Yes,
to
it's
be.
descending.
Yeah, they're both descending.
Okay, so let's go and draw this thing out. I like this little anchor. Let's see. This is the area we're looking at. Here's this nice move down. Here's the area we're looking at right in here. So I'm going to take a look at that. Descending and put my anchor here.
It looks like a really nice continuation wedge. You see how you have this big move down and then it consolidates. So we'll see. We'll see if this ends up being a continuation. So it's going
Here's
to
our
keep
A.
on going down.
Here's our. Okay, there's our anchor. Here's our hit. Here's our hit. I'm bring this up here, tuck this one in. I'm gonna bring this one over and see if we have a flat line there. I'll make this my higher time frame. And we're on the 1 minute now. We have the, where's our strength here? Let's see, this is the British pound. Get my other chart up here.
I've drawn it a little different than you, and I have almost kind of flat bottom descending wedge. If
Flat
you
bottom,
put
yeah.
the D where the B is, and the B on the previous lowest low. I mean, around 6:30, a little bit after that.
6, like over here?
Yeah.
Right there? Okay, now let's take a look at that. I'll take a look at that.
Personally, I like it better that way.
Yeah, the only thing I don't like about that is we have a bunch of candles that closed in here. That's
But I did put my D where the other candles are.
yeah. Yeah, this one created a lower low. Let's see, here was.
Gone.
Yeah, I've got to keep mine here because I won't allow myself to break candles. So here, I will I'll allow a 2 pip Let's just see how many pips that is. From, let's see, here's that little, there's a little doji there. Let's just take it from that. From there, that's at 24. Well, you have 3 pips, so.
Yeah,
so the
that's
break, that's too much for me. That's too much for me.
yeah, that's a pretty. Oh, that's on the 1 minute. You're fine. Oh, I like what he was doing. So he pulled it back to the lowest low about 12:30 last night, and then he
12:30.
used the bottom. Yeah, right there. So that's the
I don't
bottom
have
he
any,
used.
I don't have anything at 12:30.
That's his time zone. My bad. Our time zone is 6:15.
Right where the B
So
is now. That's
Six,
correct.
six, 6:35. Yeah.
And
Yeah.
I've put my D where the
At-
candles are breaking in your wedge.
yeah. So he gave it more room, like you usually do.
Like that.
Actually, I did it the same way as
Really like
Okay.
it like this.
I can accept. Yeah, I can accept that. But now we don't have the hit here. So now we have another
That's
with a
correct.
strong move down. But here's the descending wedge. Here's the hit. So this one's validated. This one. Let's see, wedge. So this one, we have the bounce there. We have the crossovers of the moving averages. So I would have to see, it would have to, let's see, I would have to see a break through the bottom of this one right here. So again, this would be my wedge within the wedge. We have to move up. Tuck that in, tuck this one in. I'll flatten this one right up to the top of that. I'll make this one yellow. And now we actually do have almost, this might work here. I'd have to see it close below. Let's see how many pips do I have to the downside here. If this thing breaks to the downside, if it breaks below this blue candle over here to the downside, oops, I can't measure it like that. Try this again. I just take my wedge off? Is that what I just did? What happened to my wedge?
I still see it.
Well, this is a secondary wedge.
Oh, yeah, okay. My bad.
Yeah, I think I turned it, I think I took it off accidentally here. Let's try this again. Descending from here to here to there to there. Make this one orange. All right, time frame. Let's get to my 5-minute chart here so I can see a little bit better. There. And let's see, take this one right to that one. There we go. That's what I'm going to lock this one in. So right now, if it breaks this blue candle and closes, let's see, we have a series of blue candles here. So you have a wick, comes over, here's the body, but here's a wick. I don't know what's over on this side. Still have lots of room, there's nothing over here anytime soon, so there should be an area down there that'd be enough for a target. But right now I'm thinking this thing is maybe more apt to go to the, this is just a pullback. I think this is a pullback. from here to the bottom of the wedge, 13 pips, enough room to the downside. So if we get a break and close below this area right in here, I may be apt to take this thing short. And to the upside, if it breaks here, I would be looking at enter on close. So this candle comes up and closes inside here, breaks the wedge, closes inside. We still have a target up here, which is 65 to, that's still 20 pips away to this target up here.
Let's hope this is your birthday wedge you have been waiting for.
Yeah, I haven't taken any trades yet today. Let's see where this way this thing's going to go. I'm thinking this, it's giving me a little bit more reason to be taking this thing short on the break of this.
I do like it short, Al, and the only reason is because you see how all those wicks are coming up and they're kind of failing.
Yeah, exactly.
There's a lot of wicks.
The upper trend line is holding. This one is still, like I said, here's our little secondary wedge in here. Now this would be an early entry. I mean, here's the orange trend line is the main wedge. All this is going to do is give us a little earlier entry. All the moving averages on here are in the right direction. We have where's our white one? It's our 5 minute. Yeah, 5 minutes way up here, yellow, green. If we go to our 1 minute chart, they're all in the correct order. If we get the close inside here, I'm going to take this thing short.
That's something that I like to see on the 5 and the 15. The 62 moving average is way up above the wedge.
Yeah, this gives us lots of room here. I want to see a close in here, and then I'll take it. But my stop is going to be up in this area. My stop's going to be all the way up here in this other entry area. This is the British US that we're looking at here.
Yep, make sure to not enter on the wrong currency pair.
Yeah, don't do that. And we have the US is strong. If we look on our US is strong on all three pairs, all three time frames by 3. So that's good.
Matt, you need to be more gentle with yourself on that. I think we've all done that at least once.
Yeah, I'm just reminding people.
We could take this, if it doesn't break through, or this blue candle, it held. So I would be okay taking this thing short if once this candle closes with a nice little pullback. Right now, this is basing right in here. Drop, base. If that candle closes on a neutral candle, meaning that it closes in the upper part. So right now we're getting, I say we have to wait for another 48 seconds and see how this thing closes. And if it does, then we can take it short. And so I want to see it close inside this blue zone. Here's a drop, it's basing.
Another thing that I've been noticing, and I can be incorrect, of course, but I started to notice when the price is going the wrong way, the EMAs are starting to go away from each other.
Yes. Yeah, they do. And if it's in the right direction, you'll start seeing them start to spread a little bit. Like here, they're starting to spread out a little bit here.
And that's exactly what they're doing indeed.
And I'm going to take this as I'm looking at a sell on this one. Still need to close in there. Dollar is still showing strong. I don't want to be taking this thing long with the dollar being stronger than the British pound by this. And if we do get in here, 7 pips.
I'm not sure, but I can see this thing maybe basing a little bit and then just go boom way to the downside
Yeah.
of that first wedge.
We're gonna try and catch the close somewhere in here. Here's our 7 pip stop. Here's our 7 pip target. We have see if we have a fib line here. And I'm gonna look, I like this right now, this is the blue line right here where you can see it, this line right here. That's our supplies demand zone. Here's our 7 pip target after that. So I'm gonna keep that. I'm gonna be looking at that for the target. Let's see
Boom.
if I can, boom, there it goes. Let's see, I'm trying to get my, oh wait, this is what I'm looking for. Sell, sell, sell. Boom, I'm in. Take this off. And here's that was my entry. I don't know how my target's set yet. Protect. And we're gonna look for 7 pips. 7 pips to the profit, 7 pips. Now let's give it 10 pips to the stop. And I'm gonna make my profit there's my fib line, there it goes. Yeah, if it comes anywhere close to the bottom here and bounces, then I'll take the trade off and take my profit on that. A nice little close here.
And I'm out already with 7 pips, had a bit early entry.
And we're still struggling to get those last couple pips. There's 5.
Oh, you're gonna
6.
get there. You're gonna get there. You're fine. It'll even break the bottom of there.
My sister's calling me for a happy birthday.
Nice. Well, maybe you get this, and then you'll have that extra money to have an enjoyable birthday day.
Yeah, well, we'll see what happens here. Still working on this.
Matt, did you close that euro trade from before?
Nope, I let it run, and now I'm in profit.
I'm
Like big time.
I already hit my take profit, and I'm now still in one trade.
Yeah, I'm up.
Loving this day.
Yeah, that euro trade from the other time. It's what, 4%. So it was good. It depends.
And right now,
But I took some heat on it for a while. So
right now we're 10 minutes from the market open on the U.S. market. So we have to be a little bit careful with this trade right now that doesn't quickly reverse on us. This is a little bit of that pre-market move that we had there. Give it a little bit of breathing room here. Right now, it's still holding the 13 moving average on the 1 minute chart, still holding the 5 minute. Everything's in the right direction still. Dollar is still strong to the downside. So a drop, base, drop, and it could come back and retest this little area right in here. I had one here for a retest. Maybe not. Let's make that a supply zone right there. And right now we just have to be a little patient for it to come hit our target on this. This could be a nice little move, or it could just come right back and go in the other direction. This time of day with the market opening, had this nice move before. I would not be totally surprised to see it totally reverse on us here. You don't want to take a winning trade into a losing trade. But give it some room. Still has to, still looking to see that it finds some more sellers in this area right in here. Here's where our entry was, right? We got filled on this. One thing about this little area right here, when you see this, we had the break, it didn't close into our zone. Had the blue candle, which was couldn't close. It closed inside the body of the red candle. You had another red candle close inside. But then this last blue candle, where you see had a big wick, and it was a doji. And you see, if you can look at this, you can see that this candle was a bearish candle closed, and that's one reason probably why we had this big strong move down like that. But it's coming back to retest, and we'll just see if it gives us that secondary opportunity. But here was like a drop. Here's where it was basing. Now we didn't get the close inside that blue zone, but you can look and see where it's basing like that. We get red, blue, red, and then there's really weak blue candle. You could have taken it right there. I was still okay not taking it off this first one. And we have another little, almost like another little wedge. We have a high, a lower high. And we'll see if it can still maintain this little area right in there. I probably should draw this a little differently here. Here's an anchor. Here's, I'm going to take this one up here. Came up, tried to get some more sellers up there. All right, now I'm looking for a lower low. We have a high, a low, lower high, looking for a lower low to break that B. and then break the bottom of this wedge here. See, it came down, actually came right down to the bottom of the wedge and then it rejected. So it's actually still inside the main wedge. We just were able to get a little bit earlier entry off this little pullback. But still hasn't really broken the bottom of the wedge. It's trying. Here's the origin of this move. If we go to the, let's see, we take this over here. Move this one.
I think the euro is done. I think it hit its bottom. Closed my trades out with profit. So
All right. And let's see how this one goes. Here it goes. We have let's see if this thing's going to break the bottom. Have a nice little strong move down, retracement. Let's measure that one out from here. But where's my tool here? From here to the high, 50% retracement. This could be the target down in this area. If I look at a fib tool, see if there's another line in there. There's our green line. Right now it's fighting. We did a pass and check. Did a pass, now it's checking this red line. Here's the next 7 pips down. Got the close below the B, but still hasn't broken the wedge yet.
Al, there's a question about this trade. Are we looking for a sell?
Yes, yeah, we're already in the trade.
Yeah, that one's pretty
we're
much
actually
done.
Well, we're still in the trade. We're still looking to hit a target down here. I still haven't got my 7 pips yet on this first trade. It's just now starting to bounce off that 7 pips there. I'm just going to take these off here. I think it could very well come down and test this, but if you got in up here, this was the end of the trade. Could be the end of the trade. It may keep on running, but this was my 7 pip zone right here. I got out. It didn't quite get my 7 pips. I think I ended up with 6.3 on this one right now. I didn't get the close below where the 7 pip area is.
Actually, I got in on the Swiss trade instead of this one.
Okay.
So I've got it running right now.
Actually, I did get my target on this. It did take my target out. So this one's pretty much done for now. It could keep on. It could run for another 100 pips for all we know. But we got our target out of that. We got our daily bet. As you can see, we're still respecting this. The moving averages, still respect the moving averages and coming right down. I would expect there's going to be another bounce right off of this area right in here. And it's 9:30 right now. The market is now opening. I would say if you're not in a trade right now, give it 15 minutes. Let's take a 15-minute break, and then we will come back.
Great timing.
And that way it gives us a chance. We already finished this trade. The market is now opening up at 9:30. give it 15 minutes for it to get its positions for the day, and then we will see if there's another alert coming in. So let's
Beach
take a
Panda
break.
made his pips for the day,
Yep.
and he's out, man. He's good.
Yep.
Perfect.
Very nice day. It's because it's Alice's birthday. We all got a birthday.
Yeah, I actually got my birthday trade in, so we're good.
Nice.
We're good.
See you guys in 15 minutes or so.
Yep, see you in 15 minutes. Let me get my break screen up here, and we will. Here we go, and we are on break. If anybody has any questions, well, I'll probably be sitting here anyway watching this thing, but we're officially doing a break here. Let's see, change my screen
as well.
And I'm going to pause recording and resume the charts. And we're right now, I'm drawing out the US Swiss. And we should be recording again, I believe. Yep.
Yeah, it's recording.
I'm drawing out the US Swiss. I didn't have a chance to draw that out because we went right to that British. But here's where I'm drawing the US Swiss is I'm looking to see, here was the alert at 9 o'clock. And it was an ace or a descending wedge. So I first took my, let me just move this out of the way here. I took my A all the way up here to start with. I put my B down below and actually put that over here. And I have my C, which is the next lower high. And we pretty much had a straight line across. So I'm just seeing where I could possibly get my 3 hits. And this isn't a bad spot. I could even take it from here to get a hit here to hit here. So this validates that trend line. Here's the area where it could possibly bounce from. I'll still keep this one in mind because this is a good reference, because here's a blue candle that this is low. I don't have a close below that blue candle, and it's still close enough inside where the wedge would be, where if it broke, then it would be, next thing is starting to, if it broke, it would come right into that. If it closed below that, it could go lower. But now I'm looking, this is where I'm looking more seriously, is we have it's a US Swiss, and we're looking at dollar strength here on the 5-minute chart. So I'm going to take this thing and I'm just going to pretty much flatline it across, bring this one down to the top of this wick here. I have this one over here. This is the anchor. Here's the hit. Here we had this was after the alert. We had this nice red candle that alerted right there. Now, what I'm looking at right now is that if I get a close above the CA area, I'm looking at this being the next target to go to the long side. So I'm going to, again, draw my box here. I'm going to clone this, bring this thing up, and I'm going to tuck this in. I'm going to use the A, the blue candle on the C. I'm going to use the wick of the A. And this is my zone. If I get a close inside here, I am not taking this because I already made my daily bread. So, but if I take this, I'm going to see a close inside this area. If I get the close above in here, then I'm going to be willing to take it, and my target's going to be up around this area. I'm going to check my fib lines and see there's a line right there in the middle of that zone. So this comes up, tests it. If it closes above it, it will probably retest it, and then it should be off and running. Right now, it's still having a hard time getting through this area right in here. Let me get my charts ready to go in case I get is that an alert?
Yeah, one just came through. I'm just having a look at what it
Looks
is.
like the Swiss is just now starting to break through. Did you take the Swiss short or long, Eva?
I took it long.
You took it long, okay.
Mhm.
Looks like it's actually now starting to break out of the wedge. All of our moving averages are crossing over. We have the 1362 cross right here, which is, that's the big one. All of our moving averages in the right direction. The green is starting to pull away from the yellow. Starting to get a little bit of an uptrend. Came up here, tested the green, Still did not close in that zone. And what was the alert? What was the period? It was Euro US ascending.
Ascending, yeah.
Interesting. Okay.
Play by play.
Sometimes we get a couple of them, just have to pick one to go with. And the Euro US was a ascending at 9:45. Somebody keep an eye on this Swiss for me, and I'm going to go the Euro US 9:45 ascending. Looks like it's still 9:45. Ascending, which means it should be going from low to high. I'm not seeing anything low here to bank on.
No.
I'd have to go all the way over here to this.
That's pretty far.
That's a bit of a
Yeah, but off the alert, if it's ascending, I'm not seeing anything other. I'm not seeing the ascend. I'm just seeing this more of another continuation here.
Yeah, it's more of a channel than anything. I only see a channel. Like if you're gonna try to connect some dots and stuff, there's no wedge.
Yeah, in fact, since we've already this even on the 1 minute. Let's see. Let's check the 5 minute here. Maybe the 5 minute may show something. I was on a 1 minute chart. Take some of this stuff off. Let's see, this one's done. I'll take this off, take that off, take all this stuff off. In fact, let's just take all of it off here. There you go. That makes it nice and clean. Everything else is, all the moving averages are going in the down position, downward, short. 9:45 is right here. That's the open of this candle. So right now I'm looking at this thing. I'm looking at more of a descending than an ascending. I'm not seeing anything over here lower than where the alert was. So I would have to be looking at the only way I could draw this would be, I'll put the A down here because that's what they called it, but I'm going to just flat top it here. It's really nothing more than a box that broke at the bottom. Right now, I'd have to see this thing pull back. Here's my anchor. I'd hit a hit, come back, retest, and then retest. I put the B here. Anchor, here's the hit. Now I'm waiting for another test.
Man, oh man, look at that Euro USD just melting.
Yeah, it's really dying.
Yeah.
It's exactly what a lot of us needed.
Well, the dollar is basically getting stronger for some
I should
reason.
have stayed in that trade. God damn it.
Well, don't regret it. You
No,
got out for a
I'm
specific
still in
reason.
profit. That's true.
That's right. You should not have stayed in the trade because you followed your plan.
That's true.
Yeah, well, as soon as you deviate from your plan, you're better off losing your trade because it's going to work really hard on your head because you're not consistent anymore.
I like to make it thinking that when I take a trade and when I sell for a profit, I like to leave a little bit for the next guy to make a profit.
That's really nice of you, Al.
That's great, Janine. Janine's in profit so far with the Euro trade.
It looks like the Swiss, it came up, it never really, right now, we didn't get in it. Well, in the 5 minutes, let's see if the 1 minute would give us an entry on this. Here's our 1 minute chart. And this is, sometimes this could be the argument for the 1 minute. It came up, it barely made it. It didn't actually really, I mean, it didn't get the close in there. but you had an engulfing blue candle right here. It came up, tested it, came up, broke it, came back, retested the wedge. Still didn't get a close in here on this candle right here, this one right here. Still did not get the close. Here you finally got the close above the wedge, but you didn't get the close above this area right here, and then it just popped up. Remember I was saying that we had a green line right in the middle of this. This thing still could come back, and this is on our 1 minute. Here's there was a green line on the 5 minute. Here's a blue line on the 2, on the 1 minute chart. Here's came a pass. It never really did check it yet. It could come back and retest it still. But right now, here's our 7 pips that we just had right there. I didn't even get a chance to get in that one. The only way I could have justified getting in this before this big candle would be the fact you had a engulfing this candle right here, this series of candles right here. This blue candle, and then you had it in engulfing. It had the range of this first blue candle with a real big wick. You had it engulfing, and with a closed, higher close just underneath the line. That would have been an aggressive entry. It would not quite fit the plan, but the fact you had the break, a test of the wedge, broke again, came back, tested. So it basically tested the wedge twice. Now this thing's coming back to retest. If you get a close inside this zone right here, again, if you get the close in the zone, you could probably take this trade. All the moving averages are in the correct directions, coming back to retest the yellow line, which is right inside this zone. You didn't get it on this one, but you could possibly pick it up on this one here. Let me see, a lot of times it's a pass, it comes back and rechecks it again. Strong move up, higher high, lower high. Here's a little bit of a wedge right in this area, right in here. Here's a high, here's a low. Project one right about there and bring it back down and retest. If you get the close above this red candle, you could be good to go long. Then come back down. This area is still holding. Flip a buy here. Buy stop. Let's do a buy stop at 90, 91. Good above all of our, there's our asking price. And I'd like to see it close, let's see, 90, 90. There's an entry. Or if it comes back down into the zone. And so I could take another sell. Oh, is that a sell order? That's buy. Okay, buy limit. 7 pips, 10 pips. And we're going to look at it. If it comes down into the zone of around 90, 86. Get it below the bid price. 86 right there. If I move this down just a little bit, modify it. Came back down, retested this area. I'm in the trade. I can get rid of this other one. Cancel that order. You have a nice little hook down here on the RSI. And you see our take profit is right up here. Here's where the target was that we drew up earlier, where that strong move up was. You can see our target's just below that yellow take profit line, and it's right at where the red fib line is. And we go to our triple charts. See what it looks like on the 5 minute, see what it looks like on the 10 minute, on the 15-minute chart. I'm going to take this one off just so we can see a little more clearly on the 15. Again, all of our moving averages are green, yellow, purple, green, yellow. Where's my white one here? White, all the way down there. And on my 15-minute, I have green, yellow, orange. All the moving averages are in the correct direction. And my RCS tool says it's a long on all 3 time frames. If it doesn't work out, we did nothing wrong, it just didn't work out. Now, if we get a crossover of the green and yellow moving average on this 1 minute chart, and it breaks through the bottom of the wedge, you may want to consider maybe bailing and re-enter if it comes back up again. But it could very well get a bounce right off of this 62 moving average. You may want to just move this stop just a little bit lower than that. Give it that extra couple pips. And if you get a break below there, then you may just want to bail on it.
On the UCHEF, there was an other alert earlier today. And that's also one that I took and won. It's it's several hours ago. I'm just gonna post it in the chat.
345. It was ascending again. Yeah, it was ascending wedge at 345.
Yep. Just gonna post it in the chat for those who want to view it.
Well, it looks like we had a great morning. I don't know about you guys, but
well, I've done.
I always have a great afternoon with you guys.
We just gotta we gotta get the word out, get a couple more people in here and get some people talking.
Yeah, it's a bit of a silent group usually, isn't it? No, we do have a couple of participants though.
No, but I mean more people coming into the room and whatnot.
Oh, yeah, I agree with that.
Well, eventually the word will get out. See, right now it came right down into that zone. It retested this little area right here. Give us a close in it. Red candle close, pull back out, and right now it's looking to break through this secondary wedge. Actually, I'll make this one. This is the secondary one, I think. Should be yellow. Here's the orange. Here's the main wedge right here. Or am I mistaken here? Yep, yeah, here it is. This is where the break was. Make this one a little thicker so we don't get them confused. There we go. That's the original one. Still getting a little bit of a challenge in here. We're at 10 o'clock, so a lot of times you get what they call the 10 o'clock reversal. But still, this one could go very nicely on up to the upside. Here's the bottom.
I think the U.S. dollar has gotten really strong the last little bit, so I believe that it will go to the upside. I just took another position short on Euro USD. So
I'm looking at this. Here's our move up. Here's our retracement. If we get a 30%, usually a 38% retracement or less is a strong move to where you'll be able to hit a target up here. 50%, it's not quite as cut and dry.
Yeah, 38 is a really good target.
Yeah,
that 40% zone is
right here.
Yeah,
you can see it's starting to break through that. So this could give us a little bit more. Take a little bit more heat on this. But see, the fact that I got my daily bread already, I don't have to think about this because I didn't take this trade live. But now I can practice.
Yeah, exactly.
I can see how this thing's going to go. A 60% retracement is, here's a 61% off the A right here. Here's the retracement. Here's the retracement zone right in here. It could come, which is coming right down 61% of this big move. I have my stop underneath here, so I'm still good. But we could get a bounce off of the zone, and you see where the 62 is coming right up into it. Strong retracement off this pullback, but the stronger the pullback, oftentimes the stronger the move up is. And actually, we take it all the way down from the bottom of where the D was. We may have our 38%. Let's see what this looks like.
Yeah, we like to let it breathe a little bit. You know,
Well, here we go. Look at this. So here we go off of the bigger move down. Here's our 38%. Now I can say, okay, I think the target could very well be up in this area.
I'm gonna have to go, you guys. It's 4 p.m. here. I have some obligations.
Okay, Ruben, thank you so much for your presence and your contribution today. And we'll see you tomorrow.
Thanks,
Yes,
Ruben.
of course. See you
Thanks,
tomorrow,
Ruben.
everyone.
All right, later, man. Beach Panda, great observation. So, the anxiety of watching actual money fluctuate in your account. You know what Al and I like to do? We like to put pips in the MetaTrader 4 so that we don't really worry so much about the value of the currency. Because if seeing $20 in the red or $20 profit can drive you crazy, just wait till that $20 becomes 10,000. Because whatever move we have here, it grows substantially as you get into the compound effect. As you get into like bigger account sizes, the amount of swing that you're gonna experience is pretty significant. And that's why we like tight stop losses.
Yeah.
So that we don't have to sit in, for example, negative $200.
And if
maybe that's an amount.
Yeah. Do you know how to make your profit show pips? If not, I can show you how to do that. And just so basically all you have to do is go over here to where it says profit, just right click on profit, come down here where it says profit as points. And then that will be how many pips it is.
Yeah, that way it'll it'll help with that side of it.
You can have it as deposit currency. You could have it as pips. And that way you're just looking at pips, because that way a pip is a pip whether you have a $10,000 account or a $100 account. A pip is still a pip. The value is different, but that way you just start getting used to just looking at, I'm just looking for 7 pips. When you see the 7 pips, no matter what size account you have, take your profit.
Exactly.
Again, like
Because
I said, go ahead.
Go ahead.
Matt.
No, I was going to say, as your account grows, you're going to get to a point where you're risking the entirety of your small account in one trade, and that is a threshold that is hard to overcome.
And all the more reason that as you grow your account slowly, just slowly add those pips to it, so that way your mind starts getting adjusted to that new number. The pips are the same, but your mind starts adjusting to the fact that, before it was a $5 was my 5 pips, now it's $15, or now it's $18. And you say, okay, it was just $18. It's still within that comfort level of what your mind can say, because you've allowed your mind to grow with your account. But if you do your demo trading with a $100 account and you say, oh, I've got 3 months worth of profits, I'm going to now dump a $10,000 account because I feel really comfortable with my trades. Now every time that pip it's like not just $10, it's $100. And it's like, well, now $100 seems like a lot of money, but if you let your mind grow with your account slowly, you slowly adjust to how valuable a pip is.
Yeah, it makes a big difference, because when you're going from $10 a pip, so that means you could potentially, on a 7 pip stop loss, lose $70 in your trade, which is it's an okay amount. Most people in the world can do very good with $70 a day. But when you're changing that to $700, when you're risking $700 in your trade, now you need to know what you're doing. There's no guessing. There's no, hey, this looks like a good trade. It's, I need enough trades under my belt that it feels comfortable and there's no emotion attached to the trading whatsoever. Because you might take it really early. You might take the first 2 or 3 pips profit and you're like, oh yeah, $300, let's go. When it could go significantly further. So it is a double-edged sword when you get to the bigger dollar values. Well, what are we done at 10:15 now?
At 10:15, yep. And actually looks like this trade we're taking some heat on this trade. It came back, it broke through the moving average, the 62. Let's see where it is on our 5-minute chart. Our 62 on the 5-minute is still all the way down here where our stop is. It could very well be testing that. It broke through the yellow 13, but it didn't hold so far. There was our bounce. Remember, I told you I pulled my stop out back a little bit to get a little bit more room because of a little deeper retracement. And so it's down all the way down to here. It's retraced down to there. 50% retracement from that move. Still protecting the 16. Now I could get stopped out here, but if it comes stop and breaks up again, I'll just jump back in again. You want to have a stop. You want to give it enough room to breathe. But if you get stopped out and it reverses on you, just get back in again. If it gives you a reason to get back in again, but you're better off doing that. Take the stop than have it go all the way down here and say, oh. And if you get stopped here, you may have an opportunity to get long down in this area. So just because you get stopped out doesn't mean that you give up, because oftentimes you're protecting yourself, but that doesn't mean you can't jump back in again.
Yeah, as long as you recalibrate your head.
Yeah, you have to.
Some people.
Yeah, exactly. You have to recalibrate.
Some people can't take a loss and take another trade. That's just the reality of it. But you don't want to be in a trade a very long time Like, you don't want to be sitting on a trade and say, well, I think it's just going to turn around, and I think it's just going to turn around. And then you end up with 50 pips of drawdown. And then you have to hedge your position. And then you need to sit in a trade that you shouldn't be in for like a week. You know, and I'm talking from experience because I've done that. I got overly confident. I was doing very, very well, and I used a much bigger lot size than I should have, and got myself into a pretty substantial mess. And it was right around the time that my son was born, so it wasn't really a good time to be focusing on trading and stuff. So, but yeah, it's easier said than done.
Yeah. So right now, you look, I got stopped out here.
I did too, by the way.
But it's bouncing. It's right now. It's challenging this 62. If it breaks through the 62, I mean, part of your answer will say, well, I just got stopped out here. I'm going to go on and take it short because it's going down here. Well, maybe it's not. Or maybe you say, okay, right now it's back in the wedge. I don't know which way it's going to go. If it comes back up and gives you another entry, take it again, try it again. Because then it's just a pullback. It could go and give us another test down here. All these moving averages on the 1 minute are now crossing over with a loss, and we have the strength. Again, remember I mentioned about the 10 o'clock reversal. A lot of times these markets will reverse positions at 10 o'clock. 9:30 opens, comes up, gets everybody in, reverses position. And question is, would you have room for a trade from here to here? I don't know that there's enough room here for that. And you could get through 10 pips. They have the 1 minute reversal inside the wedge. With this being earlier entry, I don't like the moving averages where they are. We have this one's breaking, didn't close yet. We're coming up. We have a 62 down here. That oftentimes gets retested. So we have this one to go through. And I can sit here and say, I'm really glad I didn't take this trade because if I had taken this trade, I've just given back a lot of my profit that I made today. And then I wouldn't have been happy with myself. There's a 1562 there.
Beach Panda, in response to your question about walking away if you take 3 losing trades a day, we all have to have our rules. Some people, if after 3 losing trades you walk away, that's probably the best thing you could do that particular day, because you don't want to get into revenge trading trying to win back what you just lost. So you put it away and you sleep on it, and then come back the next day when you're fresh and try again.
Because a lot of times the markets just move differently sometimes during the day, and may just move off enough to where you can't. All you do is keep getting stopped out. Just say today's not a day to be trading. Just walk away from it.
Yeah, I don't. You're three losses in a day. That's pretty significant. Myself, it's 2. If I take 2 losses in one day, it's game over. If the next day I take 2 losses again, so that means 4 losses in 1 week, I am done trading for the week. That means either my head's wrong or something's going on. It could be real life. It could be a lot of things, but if I'm taking 4 losses in 1 week, it's game over for me. And that's just how I protect my capital.
And I agree with you, Matt, 100%. I'm the same way. If it's 2 in one day, that's it. I'm finished. I'm not even trying for that 3rd one. And 4, yeah, definitely. Just let it go for the week, take a break, and come back fresh.
If you're winning 4 out of 5 days a week and you lose on one day, it only takes one day to make that back up, and now you have possibly 3 positive days. You had lose one, you win one, you gain back the loss, so now you're back to break even. You still have 3 more days to be able to make the weekly profit. If you start taking multiple trades, losses, and now that one day that make up, it now becomes 2 days, or that 2 days
and
now
then
becomes
2 weeks.
a week, or now it's 2 weeks. And you had 1 week of profits, and it's going to take you a month to get it all back again. It's just not worth it.
And that is more damaging than the potential profits you could have made. It's not the dollars that you lose. It's your
The head game.
your mental
psyche.
your mental account that's just getting
Yeah.
spent.
Yeah.
And you're doubting yourself, and you're doubting your system, and you're doubting your abilities, and you're doubting everything you've been working for, and your mind is now playing games on you by saying, oh well, this works for everyone else, but it doesn't work for me. Or
Yeah.
why is Al able to make these pips? Or why is Matt able to take these trades? And every time I take a trade, it fails.
Be as protective of your emotional equity as you are your money equity.
Al, even more. I would say even more, because you can refill an account. Okay, if you're in most countries, and most people are in, with some exceptions, some countries, it's a lot harder to refund a small account, but it's a lot harder to refund your emotional account than it is to refund your monetary account.
So, having said all that, it's 10:17, and we're 2 minutes past our get out time. So, I'd like to thank everybody for coming in. Hope everybody made some money today. How many people made some money today? Anybody? Raise your hands if you made a little bit of profits today.
Yeah, let's check that out. We got 1,
2.
you got 2, 3.
We know Ruben did.
And we know Ruben did.
Yeah.
That's 4. I did.
And I
Matt
did.
5, 6,
So-
7 out of
Okay.
what, 11?
So,
How'd you do, Janine? You were in that trade for profit. How did it end up for you? Can we unmute her for a moment just so she can give us a quick update?
I gotta roll, but I appreciate you guys,
oh,
and we
she's-
will
she's-
catch you all
she's-
tomorrow.
She's out of there. Okay. All right. Thanks everybody for coming in. We're going to stop the recording, and we'll be seeing you again tomorrow. Same time, same place.
Tomorrow, everyone.
See you then.
Bye. Janine took 20 pips.
20 pips.
Awesome stuff.
Fantastic.
There, here we go.